Good morning. This is Bruce at Fleet Capital Management. It is Saturday morning, the 13th of April, 2024. We're just coming off of a difficult week, a rather difficult week for the markets, but I want to take a look at the charts and allow the charts to tell us if we should panic, if we should ride through. The charts do a great job of giving us indications of what is next for the market. So let's put aside any opinions and let's take a look at the charts in just a moment. We always need to start by saying the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell a security. I'm always available, Bruce at Fleet Capital Management. Website, fleetcapitalmanagement.com, 2 buttons. One will take you to the most recent market analysis videos. The other will put you on my calendar so we can do a Zoom call together. So when we look at market conditions, we generally have lots of different areas of technical analysis that we can look at, but the most common are moving averages. So the way I identify market conditions is a full trend, and we're assuming an uptrend for now. A full trend is the 20-day moving average is greater than the 50-day moving average, which is greater than the 200-day moving average. I didn't do that very well with my slashes, but that's okay. You get the point. And then a pullback, which is very common, is when the 8 is below the 20 moving average, a correction when the 20 is below the 50 moving average, a bear market when the 20 is below the 50 is below the 200. These are all daily. But for the bear market, I primarily use weekly when the 10 is below the 20. And we're going to take a look at all of this. So you don't have to remember this, but we're going to take a look at this. And remember, pullbacks are incredibly common. Corrections are less common and bear markets are less common once again. So just keep that in mind. And as I always say, based on that the single most important thing to know is whether the market's going up or down. Everything else follows from there. So let's take a look at a number of things. The first is our matrix. And what you will see is that, and this was updated through yesterday, is that on the shortest term, the daily, we've gone from a full up to a neutral, not to a down, but to a neutral. And I'll show you that. And on the weekly, which is a little bit more conservative way of looking at the market and our groups, our aggressive groups, that's in an up situation. The daily moving averages, the 20 is above the 50 is above the 200. Well, that's bullish. That's a bullish configuration. That's what we were just talking about. And on the weekly, the 10-week is above the 20-week. And this is our primary, not our only, but our primary bear market indicator. The VIX. The VIX really shot up over the last couple of weeks. You can see we were down in the 13s and then the 16s and then the 17s. So the VIX, which is the fear index, has been rising. What our general rule is if it's greater, if it's 20 or greater, excuse me, if it's 20 or less, it's considered bullish. And if it's 20 or greater, it's considered bearish. In reality, once it gets up over about 18 and a half, that I would call that a neutral zone, but leaning towards bearish. But right now we're not. We're still in the green. The IBD exposure has been 3, which doesn't mean get out of the market. It just means they feel like there's some weakness and then it can pop back up or it can pop down. We haven't gone there yet. So keeping this in mind, let's take a look at charts. And I want to do something fun for you. We were just looking at the weekly. And the weekly, if I go back, the weekly is a little bit more stable, if you will, than the daily. At the weekly is what we use for our primary bear market indicators. And many, I don't know if it's most, but many large institutions, there are plenty of them that only look at weekly signals. They never look at daily signals, but I look at both. So since we were talking about the importance of weekly for just a second, here's the S&P 500, and tell me if there's anything on this chart that looks concerning to you. We were up near the top of the linear regression and we're down, but we're not even at the mean. so that looks fine. The color of the bar is green, which means the momentum is still up. We've got more buying than selling, although it's getting a little bit weaker. So is there anything on this particular chart that looks bad to you? And the answer should be no. And if you haven't figured it out yet, we're looking at a weekly chart, not a daily chart. And I did that on purpose, of the S&P 500. So on a weekly basis, yeah, we're seeing that 2-week line come down, but it certainly hasn't crossed the 10-week, and the bear market indicator is the 10-week crosses below the 20-week. So that looks fine. Now, let's switch over to the daily. Let me eliminate that, put that on, and now we're on the daily, and let me expand this or blow this up for you a little bit. Okay, so here's the daily S&P 500. Now, this looks a little bit different, but this is contained within the weekly. And you can see we've gone into kind of a weak period. That's what these purple bars are suggesting. It's kind of a weak period. And that white line is the 8 and the blue is the 21. And they are what I like to call kissing, but they have not crossed yet. So the first thing that I look at on this daily is this. The 8 has not crossed below the 21, but it's not far away. They're kissing. Second thing I look at is this is the 50-day moving average, which is, you may not be able to tell, but this is a little bit wider than the others. This is an important one. And 50-day often, most of the time, acts as support for price, because the big mutual funds will tend to go in and buy at the 50-day moving average. They feel like that's an inexpensive place to buy during an uptrend. And you can see it came right down to the 50-day moving average, and it bounced off just slightly. This little dotted line is where the price closed on Friday. So we are seeing, this is not a negative yet, but it's really close. This is not a negative yet, but it's really close. And down here, this is called RSI, or relative strength. This, as long as it's above this 50 line right here, it means the market is bullish. And this has not crossed yet, but it's close. And things happen, little tiny crosses happen that are just fake outs, but we're just kind of looking at the big picture here. So when it comes to the overall market, the S&P 500, it does look a little concerning, but it hasn't broken any major rules yet. If I go over to another charting platform, and we're going to look at the SPY, and we're going to look at it on a daily basis, and bear with me while I fix a couple of things here so I can show you properly. Oops. Sorry, I'm just trying to move this. It's very sensitive. Okay. Okay, so what I've just done is on the, let me get rid of the heat map for a second, and let me get rid of the trend lines for a second. Okay, so what you can see here is the S&P 500 or the SPY has been a little bit weak. And like I said, the 8 has not crossed below the 21, but I want to show you some different things on this chart that this chart actually looks at. If you remember, these gray bars over on the right-hand side are volume at price. Down here, this pink line, that means that this is called point of control. The most volume was at this price, right in here, if you can see that. And what we look for is there's a cluster of volume up here. You can see that they're all pretty similar. Which means there's been a lot of trading as the price is in this area. If the price, and let me get my pen back, if the price, which is currently right there, were to fall below what we call this shelf, okay, that shelf of prices up in here, then it is likely that it would fall rapidly down to this shelf. Now, does this happen 100% of the time? No, nothing happens 100% of the time, but it happens a lot. Okay, so what I've done is I've put a mental stop right down here on this red line. And what that is saying is if the price closes below the 50, which is right here, the 50-day moving average, and encroaches down into this area, we probably want to get out of this stock. So, and this is the market, the S&P 500. And I do this for every single stock. Another one that I would show you, which is interesting, that I did have a stop in the system. And let me just make a couple of adjustments so it's accurate. Right there. Okay. Was Builder stock. So Builder, the 8 did cross below the 21. It came down to the 50, and it looks like it's breaking the 50. So I had a stop, if you see the red line right here at the bottom of this shelf. I didn't want it to fall past this shelf. And it came down and didn't hit it. It played around in that area again on Thursday. It didn't hit it. Here's Friday. It didn't hit it. So this particular stop is actually in the market. It's in the system. So if the price touches that, we're going to be sold out. I don't put stops in the system unless we're getting really close, because I prefer to have stops out of the system and just have them mental. Like, for instance, CRM, and adjust this just a little bit. There we go. So CRM, I've got a stop level of 294.32, which is this red line right there. Let's see, hang on a second, excuse me, 289, which is that red line right there. So that's not in the system yet, but this is a place where if it starts getting close to this, I'll put it into the system. Now, you see this white line here and this white line here? Those are called pivot points. And what pivot points generally show is an area of consolidation, and it will normally stay within that, within a couple of ticks. And that's another reason I put my stop down here. So another thing is, during this weakness on this particular stock, CRM, if you look at the very bottom, the volume has been way below average. So we had one big volume day on that wild day that we had, but then everything else has been below average. What does this mean? Well, this tends to suggest that institutions, mutual funds, insurance companies, the big banks, are not selling this stock. They're not unloading this stock, because if they were, we would have much higher. Like over here, they were building their position. This was really clear that right around the earnings, some institutions were putting in huge orders, and that pushed the price up. So again, there are so many pieces of information that go into where to put a stop. What's the goal of the stop? The goal of the stop, some people would say, is to pick a place where you're no longer willing to lose any more money. That's a true statement. That's a true statement. But I would also expand that to the goal of a stop is to not get stopped out. Because, you know, we had this big run up and then we had this big downdraft. And we wouldn't have wanted to have been stopped out here, or we would have missed this. And markets go up, down, and sideways. Does this look sideways or down? It feels down, but it really looks like just a congestion zone. We can go to any number of stocks that you'd like. If we go here, and let me adjust, I always have to adjust this for when did that trend start, right about here, and that will make everything correct. Okay, so the most volume for SMCI is that point of control line. That's where the most volume is in this time frame. And I have a stop. There's a mental stop in the system, because if it closes below the 50, this looks like a good place to get out. But it hasn't done it yet. It kind of hit the 50 and bounced. If I look down here at all of this volume, there's like no volume in here. So if the big institutions don't seem to be selling off big pieces of their security, why should we? Because we assume they're smarter than we are. They're the ones who are called smart money. and I don't see them doing anything. Now over here, I saw them buying like crazy, and look at what happened to the price. But I don't see them selling like crazy. But even with all of that, there has to be a line in the sand somewhere. And the line in the sand that I have put for this one is right here. And as you will see, it came down to that level before and bounced. So I'm again, if it comes down below the 50, that I don't like that, and it closes. And if it doesn't bounce off of this line again, an area of support, then we would sell it, take our profits, and wait till things change to come back in, because we can always come back into a stock. So, and while we're here, let's take a look at the weekly. I'm going to go back to the other graph and go to SMCI. And I'm going to change my indicators to weekly and go to weekly. Okay, here's SMCI. We had this massive run up and it has pulled back. Well, what happened? You know what the linear regression is. And this is the mean, the red line. And the blue line, this is 2 standard deviations above. And what have I always told you? When price goes above the linear regression, it tends to fall back in. And then it went back up above the linear regression, and it tends to fall back in. And right now, it is back in the linear regression on a weekly. So on a weekly, it looks a little bit, oh, I see what's happening. And you can see here was that previous low, and I don't want it really to fall below that previous low. But on the weekly, things look a little smoother than on the daily. You know, you get a lot more noise. But if you just sort of lean back in your chair, could this look like a consolidation pattern? It could be. It looks like it to me, where the market closed on Friday at, let's just call it $900 a share. It's pretty much the same place that it closed, $900 a share, back on March 20th, which is what, 3 weeks ago. And it closed there also on March 19th. So this could be a sideways consolidation. The other thing I will remind you about consolidations is, and this was the mother of all consolidations. I mean, I almost never see consolidations like this. The longer the consolidation in time, remember when we go from left to right, that's time, the more explosive the move out of consolidation. Now, we don't know if it's going to move negative or positive, but we could surmise it was going to be positive. The RSI was green, it was positive, the DI was positive, you know, so there are lots of hints that it was going to go, and that's why we bought it. But my point is, the longer the consolidation, don't let consolidations make you crazy. They can. The longer the rest, the consolidation, the bigger the next move. So if this is a consolidation following this big move, and remember, the analogy I use is when I used to run on track, you sprint along the straight edges, and then around the curves, you rest and let your heart rate go down. I really do feel like the stock market acts very similarly. This was an enormous run up. It needs to rest. But what we don't want is for it to completely break down and come back to where we bought it. So that's why we use all these things. But we're still above the bottom of the linear regression. Yes, we're a hair below the 50-day moving average. But we have to take everything into consideration, including its volume. Here's SMCI on a daily. Here's just a different charting package, so it shows different things. This volume is pathetic. That, to me, is a consolidation. So I don't want to rush out and sell this. I'd rather give it a little bit of time. Here's another fun thing that we can take a look at. I've been showing you a little bit about seasonality. And if we look at this line, just means this is where we are. We're in the April month. And you can see for SMCI, that's what we're looking at over the last 9 years right now. It's pretty bad. It has only gained 29% of the time of the months over the last 9 years in April. And the average, the average has been a negative 4.5%. So is SMCI simply doing what it always does in April? Yeah. Is there anything extraordinary about it? No. And May, it jumps up to 57%, and the mean is an enormous 19.84% gain. So do we want to get stopped out in here? No, I don't want to get stopped out. I will, but I don't. Look at what happens in May. It's incredible. And then what we can do is, let's go down to, bear with me one second. I just need to move something out of my way. We can go down to weekly. Okay, now we're looking at weekly. And where the white line is, this is the week. This just happens to be the 15th week of the year. And you can see it doesn't do real well. I mean, it does okay, but it only gains 43% of the time. And that week is generally down on average. Let me go back to the mean, excuse me. Down 0.727%. And on the month before, the mean was down 0.34%, the same. So these are pretty negative. And then there's one more week where it's not a great week, and then we start to spike back up. So the point is, we use a lot of information to try to help us make the absolute best decisions we can. And that's what we do. Those are the rules, and that's how we follow them. And so we're using moving averages, we're using volume, we're using volume at price, which is what these are. We're using volume by time, or this is daily. So we use and we use pivot points and all kinds of things to try to make the best decision we can. I hope that helps. And again, if you look right over here, April is normally a pretty crappy month for SMCI. Guess what? We're in April, and it's been kind of a crappy month for SMCI. But that alone is not a reason to sell it. I know I ran through a ton of information just now, but I want you to understand, when it comes to stop management, if the market is in a bull market, and if I go back to the SPY, and I'm going to take off that volume because that's just going to confuse us for a second. We're not in anything negative. We're just kissing right here, and we're still above the 50. So do I like that we had this big downdraft and big volume? No, but it's not panic time. One last thing, then I'm going to show you Bitcoin real quick, but one last thing is, what is Monday coming up? Monday is tax day. It's April 15th, when taxes need to be filed, unless you file an extension, which most people don't. And we've had some really explosive gains in 2023 and now moving into 2024, but just thinking about 2023. And some people need to sell off securities to generate the cash to pay their capital gains on Monday. So I guess my point here is this could also be causing the selling. What else could be causing the selling? Well, oil prices have spiked, and potentially they have spiked because of the conflict in the Middle East, which looks like it's getting worse and not better. That could be a reason for this downdraft. If the Middle East does go into a bigger or wider war, meaning Israel with Iran, which many suspect is going to happen very soon. Remember, war is not a reason for the markets to go down. Markets generally go up during war, but right now, heading into it, it does show some uncertainty, and the markets don't like uncertainty. My point is, and I use the chart to tell me, not other analysis like we were just talking about, but there could be some pretty significant reasons why this has been happening. We're not going to know too much until next week. And one day doesn't mean anything, Monday, but Monday, Tuesday, Wednesday, we're going to start to get a much clearer picture as to how these things are breaking down. I'm just not in panic mode. We're nowhere near a bear market. We're not even yet in a pullback, although we're really close. So I would call this a pullback. We're certainly not in a correction, because for a correction, the 20 would have to cross below the 50. So again, I'm just trying to show you there are so many moving parts that it's very, very difficult just to proclaim, if you will, that the markets are going down and that's the end of it. We're just going down. So that's not going to happen. One other thing I want to show you before we leave, because some of you are trading Bitcoin with me. Here is not our ETF, but this is Bitcoin itself. And it made a high over here. And what happened? It was above the linear regression. It came back in, it rolled up, it rolled down, it rolled up, it rolled down. Man, does this look like a consolidation to me? This does not, to me, look like anything but a consolidation after a massive run for Bitcoin. It's still at 67,405. It had gone up to about 72,005, but Bitcoin's going to be very volatile. For those of you who are trading Bitcoin with me, I have always said this is a very high risk, volatile asset that I think has the potential to give us the biggest gains we've ever seen. And that's not hyperbole, that's based on fact. And the halving is coming up potentially next Friday. The institutions, the big retail institutions, I should say, which is the Merrill Lynch's, UBS's, Morgan Stanley's, they haven't even allowed their clients into Bitcoin. We're up about 67%. So a lot of those clients are really mad at those companies for not allowing them in. And I suspect, especially after the halving, those are going to start to open up. And what does that mean? That means we're going to have less supply and dramatically more demand. Well, if you ever took Economics 101, and even if the only thing you know about economics is supply and demand, this looks like an interesting story, but we won't be foolish. We will sell out at certain points, but I don't see any reason to do that now. So again, I know I'm going through a lot of information here for you. I apologize, but I do want you to understand that stop management is an art. It is not a science. And the goal, in my opinion, is not to get stopped out unless we see real significant weakness in both the market and the underlying security. And based on my analysis, we're just not there yet. We may be there next week. I don't know. Or this thing may turn around and pop back up. I don't know. That's why we allow the charts to tell us what to do. I hope this helped. If you would like a little deeper dive or more explanation into anything that I have been talking about today, please hop on my calendar, click on the calendar button and do a Zoom call with me, and I'll be happy to explain in as much detail as you would like to help you understand how these decisions are made. And we will go from there. So have a wonderful weekend. I will see you back on Monday, which is tax day, and we will talk then. Bye-bye.